This is all about price behavior, momentum, and what the market itself was signaling before the silver collapsed. So you need to understand that silver did not fall randomly. This move was telegraphed in advance. The recent drop in silver was not a surprise. Why this was not a surprise, why momentum traders were forced out, and why this decline may actually be part of a larger setup. So you have two panels. The top one is a silver price. The white line shows silver prices over time, kind of obvious, and you could see what happened. The time runs from left to right, and high on the charts mean higher prices. Okay, so we're clear. Now you'll notice it is a long upward trend, and then you have two yellow cycles near the highs, and a sharp vertical drop on the right side. This tells us silver had strong rally, repeated failed push higher, and a sudden breakdown. But price alone never tells the full story. This is why we look below. Below is the 14-day RSI, which is basically the relative strength index. So RSI measures momentum, not price. It tells us how stretched a move has become. And it goes between 0 to 100. Above 70, the market is overheated. Below 30 and 40, market is washed out. And around 50, you're kind of neutral. The first circle on top is 90, and the circle at the bottom is 37. So if you look at it closely, our RSI surged above 80 during the silver rally. That's extremely rare. The rally, the first circle at the bottom, the blue line, the first yellow circle. And that's not really strength, that is crowding. And when momentum breaks from those levels, moves tends to be violent, as I usually say. So now let's focus on the first yellow circle near the top. What happened here? Well, silver made a new price high. RSI did not, right? If you look at the circle for the RSI at near 90, it didn't beat the previous one in October 2025. And at that time, if you look at the price of silver, it wasn't high either. So we're reaching a new high in silver, but the RSI didn't go any higher. So it simply means that price goes higher, momentum says, I'm tired. Momentum says, I can't, no, that's it. So looking at that alone, when it says I'm tired, this is one of the oldest and most reliable signals in the market. It means buyers are still pushing price up, but fewer participants are doing the work. The rally is becoming fragile. I mean, you could have had this, I should have shown you this chart in December. And I'll say, look at this. We're going up, but with less conviction. So then it happens again. Look at the second yellow circle. Another attempt higher. Another failure in momentum. Now, let's talk about the recent large drop in silver prices. Look at the RSI collapse on the far right. The RSI fell from above 70, right, to nearly 37. This tells us three things. Leverage was high. When the RSI is elevated, traders are crowded, positions are leveraged, and stops are close. When price breaks, selling feeds on itself. This was forced selling. This wasn't investors calming exiting. This was stop loss trigger, margin calls, and systemic selling. Because it's the opposite of the first circle. You're tied one way. This is why the price fell vertically, not gradually. When odds are near the highs, it means excess optimism is gone. Weak hands are flushed out. The market is no longer crowded. This is exactly what corrections are designed to do. And here's the most important takeaway. The decline did not break the long-term trend. Look at the look at the bigger picture. Silver is still far above prior cycles low. Look, what I mean by that, look how low the blue line is, right? But yet, silver didn't drop accordingly. Silver is still pretty high compared to the lows. There's something off. Historically, silver does this. So RSI is resetting, not collapsing into panic levels. Historically, silver does this, during explosive rallies, sharp, frightening pullbacks, and long consolidation. This is classic silver behavior. And the mistake most investors make is confusing the volatility with failure, correction with trend reversals. This chart shows that a momentum unwind, not a structural breakdown. Here's what the chart is telling us right now. Don't tell anyone. Only the 38 of us. The recent drop was technically justified. It was signaled in advance. It cleaned out excess leverage and it reset momentum for the next phase. Silver does not move smoothly. It never has. So the real risk is ignoring what this chart is saying. Markets don't punish patience, they punish crowding. The point that I'm trying to make here is our RSI is now too low when compared to the spot silver price. In plain terms, RSI measures how hard price has been pushed recently. When the RSI collapses this far without price collapsing proportionally, it tells us selling pressure has been intense, but the price damage has been more than contained. So the sharp fall in silver wasn't just a correction, it was a momentum reset that might have gone slightly too far. And I will say this about silver. Coincidentally or not, the day when silver collapsed was the day when, obviously, JP Morgan decided to exercise its excess short. And it now owns 3 million ounces of silver, physical silver. It says, no, I don't want to collect the money I made by the price collapsing. I want silver. And you could look at this. JP Morgan is now recommending, not the same people, obviously. Other people at JP Morgan basically are recommending silver prices at $125. They bought the stuff at, $70. And at the same time, the CME increased they reset the margin requirements. They reset the margin requirements by 15%. So, if you're the little guy and you were long silver, with your, and you borrowed money to make money if it goes up, and it was going down, and then they tell you, oh, by the way, you need to put 15% more. You say, I can't afford it. Well, then you better sell. And that's what they did. They sold their silver, which made things even worse. And usually CME does this to clean up a little bit the too much speculation from the small investors. So you heard it here first. Don't give up on silver.